Hi, everyone. We're waiting. Let's talk a little bit about today. And today is the second webinar, webinar 2. This is and is still part of a 3-part series on decentralized finance and a 3-part series of the webinars. I know a lot of webinars today are usually really, really long. So, like an entire day. But because we're today on the crypto space, we are all on these digital spaces, we get distracted very easily. So each of these webinars are just cut to 2 hours long. And the last time I had a lot of complaints because we packed the entire 2 hours with just introduction to DeFi. So webinar 1 was just introduction to DeFi. It went very well. We talked about what is there in DeFi, how do we move from traditional finance or traditional USD to decentralized money, so like Bitcoins, all the way to the DeFi space where we are today. We talked about the different risks, the rewards, the different kind of doubts that you have in place, like Ponzi scams. Is this all a Ponzi scam? And also we talked about how to get started. So how to get started with all these different types of tools available, what is yield farming, what are the tools to start yield farming. So we did all those introductions. The thing is, that's a lot of information, right? And in crypto world, we like to say that one day in the crypto world is 1 week in the real world. So that is a lot of information in just 2 hours. And because of that, there isn't a lot of space and time to have a lot of Q&A. There are a lot of complaints. I heard and I received all your complaints. So in this webinar, the second webinar, what we're going to do is to introduce all these different dApps and applications and protocols available in the DeFi space. We're going to introduce some of the projects. We have great, brilliant people with us today. And also we're going to share we're going to have a big session on the Q&A. So feel free to ask questions. If you go down, you can see ask questions segment. You can ask your questions there, or you can put them in the chat. And with that, we can have a lot more conversations going on, and we're going to be answering questions. I have a lot of time today. I allocated enough time today to answer all the questions, because I think the space is quite complicated. And as much as we can educate you talking about all the fundamentals, sometimes we go from step 1 to step 10 because we assume that you know from step 2 to step 9. But that's not a good assumption. So that's why there's this huge Q&A going on. So you can ask questions and ask a lot of questions, because now is the best time to ask questions. And there's no such thing as stupid questions. Don't worry about it. I ask a lot of stupid questions. And it's okay. It's all part of the learning process. So if you have questions, just ask. I think we're slowly getting more people in. So I think I'll start some introductions and then we can get started. Okay? So once again, today we are going to introduce the DeFi space. And because it's decentralized finance, right? So think of decentralized as in you buy Legos and you have all these different Lego pieces. Because it's decentralized, they're not owned by anyone. So what you can do is to take these pieces together, build them up into this beautiful skyscraper. So that's decentralized. And then we're going to have Q&As after. This project or this webinar series will not be possible without our sponsors and partners. And I want to give a shout out to them. We've got Shark Finance. We have MakerDAO in the space. We have Abegochi. We have Bancor. And these are a few of these partners and sponsors that we have with us. This will not be possible without them because, as I mentioned, everything here is all about educational stuff. We are not selling anything, and we're just focused on educating you guys in the space. You can be crypto holders and you want to understand how to get into the DeFi space, or you're completely new in the financial space and you want to understand what is the difference between traditional finance and decentralized finance. So that's what we're here for. We're to educate you. So we're not selling anything and we're not making any money out of this. And because of that, everything is self-financed. And because everything is self-financed, we rely on sponsors and partners to help us, because these tech cost money, people cost money, and we're very grateful for them. If you want to learn more about all these sponsors, just head on to the chat and they'll be talking and they'll be introducing all the different really, really great sponsors. That being said, I need to have a disclaimer because legally I need to mention this disclaimer. Especially for this webinar, we're going to introduce a lot of projects. A lot of names, protocols, projects, they will be shared. And because it's legally binding, I have to say that none of this is financial advice. All the projects and partners and everyone that we mentioned, there are not any endorsement in any way, shape, or form. What we're doing here is to introduce you, to teach you, and to give you some understanding of what is available in the space. So nothing is financial advice. Please do your own research. Please do your own due diligence, because this is very important moving forward. the whole thing about decentralized finance is that we're decentralizing power as well. And with power comes great responsibility. So when we're decentralizing power, we're decentralizing responsibility. No one is going to be responsible for all your investment, for where you're allocating your money, for how you allocate your money, for where you keep your private keys. Because now we're giving the power to people, to peer. It's all peer-to-peer. That means you also hold the responsibility. You are responsible for all the trades you make, for all the private keys that you have. Because of that, please do your own due diligence, because that's very, very, very important. So I think let's get started, and people will start filling in. No worries. And let's get started with the first session, which is me, again, on the DeFi ecosystem and the overview of the DeFi ecosystem. Let me share my screen. Great. Okay, so this is what I want to share is the entire DeFi ecosystem, the overview of the DeFi space. And for us to understand the overview of the DeFi space, we're going to look at traditional finance and compare it with decentralized finance. And with that, we can understand the dApps or the protocols available in the ecosystem. If you look at traditional finance, whenever you ask someone, oh, what industry are you in? And people say finance, usually the questions just kind of stop over there, People don't ask, oh, what do you do in finance? Maybe the most that you ask is trade. Now, I'm a trader. But people don't ask, oh, what kind of trade do you do? Do you do FX trade, commodities trade, derivatives trade, or currency trade, or crypto trade? Usually when we talk about finance, we just stop over there. It's very different from, let's say, if you introduce yourself as, I'm a teacher. And people will be asking, oh, what do you teach? You teach history? What's the subject that you teach? What level do you teach in college? Do you teach in high school? There's a lot more questions if you're asking someone if you're a teacher. Or if you're a doctor, they'll be asking stuff like, oh, are you a surgeon? Are you a pediatrician? Are you a gynecologist? With finance, it's a little bit more difficult because finance is so complicated. And because it's so complicated, it's such a big industry. It's a trillion-dollar industry. It's very complicated. And so people usually just stop there when you say, I'm in finance. They're like, okay, good. Person's in finance, that's it. But the thing about finance is that because it's so big, it's so complicated, there's so many ways that we can learn more about it, and we can break this down, because this is very important for us to understand what are all the different sectors in this huge financial ecosystem. There are a lot of different sectors, but I want to just show 9 different sectors. Currency as a medium of exchange, assets, where do you keep your assets, exchanges, lending and borrowing, derivatives, funds and portfolios, insurance, and beyond finance. So these are 9 different sectors that I want to introduce to you. And what I'm going to do is to compare the traditional finance world with the decentralized finance world. And that's what DeFi stands for, decentralized finance. In traditional finance and decentralized finance, in the finance ecosystem in general, you have so many more sectors. This is just a small little picture. This is just the tip of the iceberg. But we don't have a lot of time, and I don't want to overload you with too much information. So I'm just going to look at 9 different sectors, so you get to compare the different kind of sectors from the traditional finance world and the decentralized finance world, so you can make sense in your head. How do they work out, and how do they all come together in the financial piece? So let's get started with medium of exchange as currency. I don't want to use the word currency because in economics, currency has 3 different functions: medium of exchange, unit of account, and means of payment. Right here, I just want to focus very much on medium of exchange. So you exchange goods and services, or you trade, you exchange something. Currency is used as that. So in traditional finance, we're talking about USD, US dollars, British pounds, euros, Japanese yen, Chinese RMB, Swiss francs, Singapore dollars, Hong Kong dollars. These are the medium of exchange. We can see them in the day-to-day trading or day-to-day life. If you go and buy a cup of coffee, you go buy a bowl of noodles, you go buy a bowl of rice, you use currency as a medium of exchange. Here, let's talk a little bit higher level, balance of payments. So when 2 different countries trade with each other, they need to trade in something, right? If Singapore is going to buy oil from Kuwait, for instance, we're going to get oil, and we're not going to send them, rice or something. We're going to send them money, because that's a medium of exchange. That's how we exchange goods and services. So we can choose the different kind of currencies available, maybe USD or maybe Singapore dollars. It really depends on the two different two different countries. So that's traditional finance. We use them in balance of payments in, between country and country trade, or we use them in a retail trade. So I go and buy coffee and I make payment with that. Very simple, very easy. You can imagine in general, it's about, people and people trading. Now, in decentralized finance, it's slightly different. I put Ethereum here, Ether here, ETH, which is quite controversial. Why? Because is Ethereum money or not? Well, yes and no. Remember I told you money or currency has 3 different functions? And I would say that Ether is used as a medium of exchange, but it's not used as a medium of exchange for peer-to-peer. So if I'm going to exchange something with someone else, I don't really use Ether. What the main focus on Ether is that when applications are built on Ethereum, the Ethereum network, they need to send data to each other to trade. So if, let's say, I want to trade my tokens on Uniswap, so it connects my wallet to Uniswap's account and they'll be trading, it's not me speaking to another person. It's not peer-to-peer. It's more application to application. So from that perspective, application to application perspective, that's where Ether comes in to trade and exchange data and information. So that's where the medium of exchange, that's why I really want to highlight medium of exchange over here, because it exchanges information and data between 2 applications. So if you think of it in the real world, you have the different underlying protocols, right? HTTPS, TCP/IP, and you have different things built on top of that. You have like Facebook or emails or Instagram or, I don't know, defi.com or something. Then it transacts information. And that is not peer-to-peer. That's application to application. In the crypto space or the DeFi space, that's Ether being transacted. So that's ETH. WBTC is Rep BTC. So the thing about BTC and Ethereum is that they're 2 different stuff. They don't really interact with each other. So think of BTC, Bitcoin, as English speaking, and Ethereum as Chinese speaking. So let's say China. Now, Bitcoin, English speaking, can't go to China and speak English because everyone there speaks Chinese. So how do you do that then? How do you mitigate the difference? Well, you do that by having a translator. Translator will be stuff like WBTC, Rep BTC. What they do, they take BTC, the English speaking, they translate it to Chinese, and so now BTC can kind of exist on the Ethereum network. So how is that being done? You have BTC, they collateralize BTC, they change it to an ERC version of Rep BTC. So they mint a new version of BTC, and that can interact on the Ethereum network. So that's the translating from English to Mandarin part, because you can't use BTC directly on Ethereum, okay? And in the USDT, that's also the similar thing. You can't just take one US dollar note and say, oh, I want to spend this US dollar note on the Ethereum network. It doesn't really work like that. So you have USDT, which is Tether, and technically what they do is to put USDT, like a USD, in a bank, and from there, based on the bank's balance, they will mint the right amount, the equivalent amount of Tether, and that's USDT. So again, that's a translation. So let's say USD speaks German or Korean, and Ethereum speaks Chinese again. So USDT is the translator, so that now USDT is ERC20 and can interact in this Chinese-speaking Ethereum platform. So all these are the medium of exchange, so you can be exchanging between these platforms. Okay, that's the first sector. The second sector, there are assets. In traditional finance, you have this existing asset classes. You have stuff like equity, current FX, or like foreign exchange, bonds, derivatives, whatever. You have a lot of different asset classes. So with equity, it'd be stuff like your stocks and shares, like Tesla, Google, Apple, these kind of things that you hear all the time in financial news, like in Bloomberg and Financial Times. With bonds, you have things like your US Treasury, you have your sovereign bonds, you have your corporate bonds. These are traditional asset classes. Nothing new has been there for a long time. In DeFi, we have this new thing called crypto asset. Now, this is quite a new asset class because it's similar yet different from the existing asset classes. And right now, there's no formal definition of DeFi being a new asset classes or crypto asset being a new asset class. So this is still out there in the open. We're working very hard with regulators to understand a little bit more about this, but we're still far from defining it as a new asset class yet. So in DeFi, in crypto asset, we're talking about stuff like DAI, comp. So DAI is used in the MakerDAO ecosystem. Comp is used in the compound ecosystem. land is used in the Aave ecosystem. YFI is used in the Yuan finance ecosystem. So new asset classes, or these are new crypto assets that are new in the space in the recent couple of years. And these are the different kind of assets available in crypto assets. Now, where do you keep these assets? Where do you keep your treasury bonds, your money, your currency, or where do you keep your Ether, your WBTC, USDT, DAI, COM, LAN, YFI? Where do you keep them? In traditional finance, you have your traditional banks, like your Bank of America, HSBC, Standard Chartered. You open a bank account with them. They do know your customers. They do some background check on you. You have a bank account, and then you can be spending money based on that. That's how you have credit. You have debit cards. That's how you be spending money. You can go to an ATM and withdraw money. That's where you keep your money. In the traditional finance space, there's also fintech banks. Stuff like your Monzo, your Revolut, Google Pay, Apple Pay, Facebook Pay, all the whatever kind of pay is available. So those are the different ways to keep your assets in traditional finance. What about DeFi? In DeFi, you don't really have banks. But in DeFi, you have wallets. So wallets would be stuff like My Ether wallet, MetaMask, Ledger, Trezor. There's so many wallets in the space, and the wallets are also dependent on what's your layer one protocol. So if it's a Bitcoin, if it's the asset is on Bitcoin versus the asset is on Ethereum versus the asset is on Cardano versus the asset is on EOS, all the different layer one protocols have slightly different wallets. Some wallets could interrupt between the different layer one protocols, but they can be very different wallets available. And then we have exchanges. What are exchanges for? Exchanges, as you can imagine, exchange, right? You can exchange between different people. So you're essentially trading. In traditional finance, you have things like your NASDAQ, your London Stock Exchange, your New York Stock Exchange, your Shanghai Stock Exchange. So these are different stock exchanges available to be trading assets with different people. In the crypto space, in the decentralized finance space, we have decentralized exchanges. So in traditional finance, all these stock exchanges are owned by someone. And in decentralized finance, it's not owned by anyone. It's owned by the community. So you have things like Uniswap, Bancor, Curve. And these exchanges are very interesting because instead of a counterparty to be trading with and an order book, it's all done with math. And it's done quite beautifully. Now, we have assets, we have currencies, we have banks and wallets to keep all these stuff. We can exchange with people, we can trade. But one of the biggest, very important thing is to lend and borrow. We lend and borrow money. We go to the bank, we borrow money, or we lend out to your friend, and lending and borrowing, it's very important. So in traditional finance, we have the banks to do that, right? We have Citibank and HSBC. You can borrow via credit card. So if you are over your limit, you're technically borrowing from the bank, or borrowing and lending can come from a higher level, institutional level. So instead of funding your company with equity funding, you fund it with debt financing. So that could be an option. So that's lending and borrowing. In the fintech space, so still in traditional finance, but in fintech specifically, we have Monzo. Stuff like Monzo. I know Monzo has borrowing and lending. Monzo has borrowing because you can do overdraft. And I'm pretty sure there are other fintech banks that do that as well. Now, in the DeFi space, instead of just call it borrowing and lending, we call them lending protocols. Protocol because these are, instead of done by this banker signing and approving, checking your background and everything and said, okay, you can borrow this amount of money. These are done by machines, protocols. So we have stuff like Aave, Maker, Compound. We're very lucky to have Maker with us today, who will be introducing Maker to us, and DAI. DAI is a very important asset in this whole lending and borrowing space. And later they will be sharing a little bit more about that. So the first 5 of them are, in general, that's what you think about finance. You have money, you have assets, you have banks, you have exchanges, you have borrowing and lending. Very simple, very, very easy. Now let's get a little bit more complicated. Let's understand a little bit more about what else is there under this entire financial space. One of the things that was a lot of money. It's like a few hundred times in market cap, more than the borrowing and lending market, is this thing called derivatives. So derivatives are financial assets. So the cool thing about derivatives is that you get to have exposure to these assets without owning them physically. So basically, you have more exposure to these kind of opportunities. And that's why derivatives are so interesting. In traditional finance, we have a lot of different types of derivatives. Futures contract, forward contract, interest rate swaps, options, structured notes, variance swaps. And these are just some of the derivatives. Derivatives are cool because you get to structure them and they are quite flexible. So you can structure them in a lot of different ways you want, because based on what you want the derivatives to do. You want them to hedge your risk. You want them to increase your exposure. You want them to increase exposure to event A or increase exposure to event B. You want to be betting for or against a specific security of a specific asset. You can use derivatives to do that. And that's why derivatives is such a big market, because it's very powerful. And in DeFi, we also have derivatives, and they're also very interesting. So some of the projects that are dealing with derivatives will be synthetic, option, OPYN. I don't really know how to pronounce that. We have Hedgic, we have FTX, we have UMA. So in the DeFi space, we have things like binary option, we have futures option, we have forward, we have futures contract, we have variance swaps. We get to long and short different assets. So you can long BTC, you can short BTC, you can long a basket of goods, you can short a basket of DeFi goods. So there are a lot of different ways available to play around with derivatives, be it traditional derivatives or DeFi derivatives. But I do have to caution that this is quite a risky thing. It's not super easy to understand because it's very complicated. And it's very important for you to understand the risk before going into the DeFi space, especially the derivative space. The other thing that I want to talk about is funds and portfolio. These are things that are available in the space out there. And usually funds and portfolios, imagine them to be a basket. So if you go for a picnic, you want to bring a few things, right? So you have a picnic basket, and inside you could have cheese and bread and apples and grapes and ham. So you have a basket of them. And based on that, people will be trading the basket instead, the picnic basket. So let's say you have one picnic basket is for vegetarian, one picnic basket is for meat eaters, one picnic basket is for people with kids. So you have different types of baskets, and people will be trading the baskets instead. Because people are lazy. They don't want to go to the supermarket and say that I want to buy this. They just say, okay, your basket looks nice. We're all vegetarian, so we're going to get the vegetarian basket. So that's the concept of funds and portfolio. In traditional finance, we have things like ETF, exchange traded funds. So this basket can be traded on a stock exchange. Remember we talked about exchanges, the New York Stock Exchange, the NASDAQ, the London Stock Exchange. Yeah, so your picnic basket can be traded over there. We have mutual funds, we have hedge funds, we have municipal funds. We have a lot of different funds available. And then you can have funds of funds. So you can have a fund of various hedge funds on there. You can have a mutual funds with various funds on there. You can even do derivatives funds. So you can do a synthetic hedge fund of a specific sets of companies in the US when you're based in Singapore. So there are a lot of fun ways to be playing around with this, and it can get really, really complicated. But let's not go so far, okay? Let's come back to the ground. Let's come back to the decentralized portfolio space. In decentralized portfolio, you have stuff like PiDAO, you have stuff like Balancer. So PiDAO is kind of like an ETF. People choose and pick assets to put it in this basket. Balancer is also similar. The thing is, I've put these different assets in one of these boxes, one of these 9 sectors and boxes over here, right? The reality is that these boxes, they don't have to just be in one box. So Balancer can be in a funds portfolio box. They can also be in the exchanges box. So these boxes are quite fluid. And one of these projects can be in multiple boxes. Then we also have insurance. So insurance is a big, big industry. In traditional finance, insurance is one of the oldest industries in the world. It's worth so much money. And insurance is one of the, it's one of the oldest industries in the world. Back in the day, where you have a lot of farmers, everyone is a farmer, everyone has a plot of land, insurance was basically all these little farmers come together to pool the money together into a pool. So if my farm gets burned down, I get insurance through this pool, and everyone will chip in, or I take money from that pool that we all share, and so I can cover my loss. But if someone else's farm is burned down, then they can also take some of my money to be covering them. So we're just insuring each other. So that's how insurance started. It was a very P2P thing. And then, you know, how market inefficiencies are there, and we have a lot of coordination in place, and economics comes into place. and big insurance companies come together to aggregate all these risks. And then you have big companies like AIG, AXA, Ping An, Aviva, Prudential. So you have big insurance people, traditional financial insurance companies in the space today. In the DeFi space, though, insurance is still relatively new. The thing about insurance is that it's quite complicated. The amount of econometrics that goes in, the amount of math that goes in, economics math that goes in, it's very complicated. Even I do not like it. I'd like to speak some math, but that's really math, because you're pricing risk and you're looking at what are the different risks available and then pricing them. So it's not very easy. So it can get quite complicated. So decentralized finance is still relatively new in the DeFi space, but it's growing. And I think it will grow to be quite big. Right now, we've got two big ones. The first one is Nexus Mutual, and they are doing insurance for the DeFi space, for financial assets. We have EtherRisk, which is doing insurance for the flights industry, which I don't think it's going to be very big right now because there are no flights going on anyway. So that's all the financial stuff. Now, the thing about finance is that it doesn't just exist within finance. Unfortunately, money makes the world go round, and you need finance in a lot of different sectors in life. So there's a lot of these use cases beyond finance, still related to finance, or tangent of traditional finance, or tangent of finance. So in traditional finance, we have things like art or betting markets. I won't use the word gambling because that's illegal in a lot of places, so I'm going to use the word betting markets. We also have these kind of stuff in the DeFi space. We have things called NFT, so non-fungible tokens. So I think non-fungible tokens are very exciting, it's going to be one of the next big things in crypto. And we're bringing NFTs with DeFi coming together to be looking at how can we interact with them, because NFTs have their own community on their own. DeFi has their own community. And when we interact them together, you've got these two communities coming together, which is very exciting and super powerful. So for example, we have Aavegotchi. And we're very lucky today because we have Aavegotchi coming later to be talking about Aavegotchi, which is a very exciting project. We have Rabbits, and we have things like The Art is Always on Sale by Simon. These are very interesting ways of playing around with NFTs, taking into some concepts of finance and DeFi. For betting markets and finance, or DeFi, we have Augur, we have Gnosis. So what I've shared right now is a very high-level overview of all these different depths available in the ecosystem, in the DeFi ecosystem. The thing about traditional finance, as I've shown you all around, is that it is still centralized at the top. You have one big bank doing all these different things. You have one big bank doing lending and borrowing, doing derivatives, doing funds. You have stuff like you have a lot of these big banks keeping your assets, doing the whole medium of exchange things, having your assets, having your borrowing, lending, doing derivatives, doing some form of insurance, keeping all these funds and portfolios, creating all these ETFs, and they have a lot of power. And what we want to do right now is to decentralize this power. How do we do that? We have all these dApps and applications and protocols that I've shown. And they're basically little building blocks, Lego blocks. And what you want to do is to take them together and build upon each other to see what kind of structures and skyscrapers you want to build, which is very interesting. So for example, you can have stuff like you have a currency, which is a medium of exchange. You put it on an exchange to get an asset. You keep this asset in your wallet, or you can put half of the asset in borrowing and lending, so you can be owning some interest. You can be earning some interest rates. You can put the other half in derivatives because you want to have different kind of exposure. Because you have different exposure, you also have insurance to hedge against your exposure, and then you could be buying into some form of funds and portfolio, of which inside they have some NFTs in there, they have some betting markets, token assets in there, or they have other kind of assets and other assets that's in place in your funds so that you get exposure. So these are just building blocks all coming together and making the entire space very interesting and exciting. And we're just starting right now. So it seems very complicated. It's very complicated, and I understand that because finance on its own is also very complicated. What we're doing is to take traditional finance into the blockchain world or into the digital world. And in this process, we have to understand what was in the space before so that we can replicate them in the digital space, and what are the inefficiencies in the traditional finance space so that we don't bring the inefficiencies with us. and how can we reduce these inefficiencies. So if you're interested in more content like that, feel free to go to my YouTube channel. There are a lot of free content available and very nerdy ones if that's something that you're interested in. It's youtube.com/c/economicsdesign. And with that, that's it.